All right. All right. Good morning, traders. Happy Friday. Stocks and options. My name is Scott, and I will be your host. So good to see you guys, by the way. Nothing brings me more. It's like I have a Pavlovian response. Chat about the market as the weekend. It just starts my weekend off right. Happy expiration day. Same to you, Ernest. Good to see you. Good morning, Fred. Good morning, LK. Friday already, Bob. Hell yeah. Here we are. Bob tries to put on a show that he's grumpy and tough, but he's really soft and loves the best friend club. He looks forward to Fridays. He sent me a personal email and told me as much. He's very, very tender-hearted. Good morning, Carmen. All right, let's hit it. Welcome to the Tradespoon Live Trading Room, Stocks and Options. I am Scott. I will be your host. This is my background. I've been trading for a while, teaching for a while. Hope we all feel good about that. Disclosures. Be careful. It's trading. It can be risky. We're not advisors, not brokers. We don't give recommendations, yada, yada. Okay. Yeah, it's been, it's gotten a little bit more interesting. And so now we find ourselves asking different questions. I will advance this slide so you don't have to look at this ugly slide. Give me 1 second and move this out of the way. I will bring up Yahoo Finance. Just can't seem to, it can't seem to, no. Rather just kind of tries and it just can't get. So the buyers are struggling here. Here's the deal. Fundamentally, we're in a good place. So if anything, my thought is, okay, perhaps we move into another correction. We've already got almost half of it. But half more to go is still a pretty decent amount of pullback. So if a person thinks that, certainly it would have an influence on, number one, how much bullish trading they do going forward. And certainly how we trade them or a different story. If you know, subtly, if you haven't been paying attention, you'd be like, oh my God, what happened? We've been noticing these things, right? So one of the things that we've discussed that has, in my opinion, shown the concern in the market, it failed to bleed it off, and then here we are, right? You don't see, is my posture negative? No, Bob, no. My posture is built to stay positive, like, and not succumb to like, oh, isn't everything bad? So, but it's not, it doesn't need to be negative for me to trade bearishly. In fact, I wouldn't expect my posture to go negative until like as we cross a 10% threshold, right? Because if it gets, 10% gets to neutral, really touched minus 0.5 for 1 week and then turned. So third straight week. And that's the thing is, if you look at it, if you take out these last 6, 1, 2, 3, 4, last, you wouldn't look at this and be like, I don't know, man, this market doesn't look good. You'd be like, yeah, it's slowed down, but the trend is still up. We're still above the 50. We're still making new highs. What's the concern? From a technical standpoint, the concern here is, well, it is kind of turning sideways. We mentioned that when it dropped out of the bottom side of this upward channel, and then it failed. So yeah, by this point, I had already declined my market posture a little bit. But if your like read on the market goes to bearish, like negative bearish, because you saw this, I mean, look, that same thing happened in January where it just kind of went sideways for a little bit and then boom, took off again. So obviously the short-term score is going to drop again. So the short-term score is going to drop again. The volume is going to drop. I'm going to drop back. So here, let me show you what it looks like. Since you asked. So I've declined 2 straight. I would expect this to drop, this to go negative. Major market, I think that the Russell is starting to feel the stress of this interest rate can being kicked down the road. Therefore, I would expect this to drop. So I think there's at least 1, 2, 3 right there. Sectors have held up. And the VIX might drop another 1/4 point. So 4, 4.25. So at 4, 4.25, I'm still bullish, like from a number, but it's not just the number, it's the trajectory, like the momentum. I'm looking at the momentum. I should probably put like a read where it like, no, I don't think that would work. But anyways, 3 weeks in a row, the decline's enough now to be like, okay, there's there now. A lot of there's in that sentence, but hopefully it made sense. Okay, so yeah, really, if you looked, it's just like this last little bit. And that was Friday. And on Friday, it did have big volume. And I have already accounted for that. Monday, we like started off like, hey, we're going to try to bounce off the 50. And then at the end of the day, we're like, no, volume. These other 3 days haven't had the volume, though. So it's not like it's like this crippling sell-off. Let's make sure we see it for what it is. And not like run around panicking. I think we could still catch a bounce from here, possibly even regaining the old high or maybe even close to it. But there's enough there that, like I said, I'd still try to speculate to the upside on bullish bounces, of course. So, are you seeing my? You guys are seeing my screen, right? I had one person say they don't see it, but is everybody seeing my screen? Also, good morning, Robert. Yeah, I'm not sure what happened, but we'll figure that out. And good morning, Mark. So exciting. All right. Okay, let me know, Carmen. All right, let's go back. They like popped up and it's like, okay, we're gonna try. And then by the time they get to the starting line, they all lose their nerve. Like, I don't know. Good news is we did have a bit of a crude pullback, which is nice. But yeah, 5 straight days. People are like, making an adjustment. Mortgages jump back above 7% because they had started to preemptively price in interest rate cuts, but now realizing, oh yeah, no, that's. But I got to tell you, where's Kevin? Is he here? He may be right. It may not come in 2024, and I'll have to eat my words. I still think 2 cuts. Personally, I still think September, December. No cuts for you. Love it. I love it. That's true, man. I don't know. We'll see if they come or not. Okay. Anything else in the news? Let's go look at the economic calendar. Ted's getting me warmed up. He said, get your bib on, buddy. Get your bib on because you're gonna be eating your words. They're not cutting this year. They're cutting this year. Come on, Jared and I, we had a text conversation where I sent him a bunch of texts. He doesn't reply sometimes, but I gave him some good feedback and made sure he understood the situation just a little better. Okay, speaking of the Fed, real quickly, let's rattle through. It's too quick and easy for us to just sort of assess and understand what the market's thinking. We are definitely kicking the can down the road. You can see we are, of course, we haven't had any probability in May for quite a while, but June, 83%, the highest it's been, where there's just not really, that's not even really hope. You want hope for a rate, it's got to be at least 30%. That's my opinion. July, hope. Just a smidgen of hope. But this is moving increasingly into a 2-to-1 type situation. So, yeah, okay. This is the first time where we have probability. Even this is not like outrageously strong. 45 to 33. That's barely better than 1-to-1, with a huge faction still expecting that we may keep them through September. But I think as long as there is at least one or two inflationary, now if the next couple of inflationary reports, I'm chatting with an AI. They're like, send your comments to the Fed. I miss Greenspan still. Yeah, okay. The market just opened. We'll get there. Stella is forecast. Oh no, I said the calendar. We have what did we get today? Jobless claims as expected. You know, nothing really in here. Some regional Fed speak tomorrow. The one, the only, Austin Goolsbee. I'm hoping Austin. No, that's today. Sorry, I'm like, what day am I on? Never. In 1 hour, I'll make sure to tune in. Next week, nothing Monday, nothing Tuesday. Durable goods, minimal Wednesday. So not until Thursday. Thursday, we do have GDP. If we see GDP in the threes, that certainly gives us something to stand on, right? And then on Friday, we have income, spending, and our next inflationary read, PCE, 1 week from today. That should give us a little bit more information. Now, here's what I think. If this next week, we could certainly move higher, where the buyers come in and catch a bounce. And then it's as we pull into this Friday data, that if this data comes back higher than expected and everyone's like, that's it, no cuts for you, bam, right? There's the double dip in the correction. Anything is this bigger than we've been seeing kind of move, right? Far surpass this. So that's where we're like, oh, I don't think this is going to be one of those recovery bounces. Now what? Well, now the concern is if we test up here and it's back above the 50, but not for long, and then it starts to roll over, that's the double dip, right? So that's where we think, oh, if I get another one of these over here now, right? This thing pulls back and maybe even accelerates a little bit, and all of a sudden, I believe correction territory was right in this area. So yeah, that certainly puts that into a double dip reach. Would I, with a 3-week decline in my posture, look to take advantage of this more than anything else? Yeah, absolutely. If this comes in, I'll definitely have a couple of bullish trades, way less than I've been having, right? And there. We also have a war looming, Carmen said. At the same time that Victor says, any thoughts on Israel and Iran? Is it a proxy for U.S. versus Russia again? Yeah. I don't know. It's an interesting situation for sure. There's the potential for escalation. But I feel like oil is really helping us to kind of, I mean, that's a big one for that region, right? Let's take a look at crude. So you can see crude is really, at this point starting to ease a little. And in fact, even today it was like it had this and come back down where it's like, hey, hold on. Now we're sitting on the 50. Certainly this looks like this could bounce again and make a higher high. But if we start to see this capitulate, then I think we're seeing the market kind of price in, is it war or is it saber rattling? Right? Apparently they sent 300 missiles and 99% of them were shot down by like a coalition of 5 different countries. Nothing really came through. And then apparently Iran said, we now consider this matter concluded, or I don't know. I'm getting my news on that from the Daily Show. It was pretty funny, but anyways. And so now, Israel does their thing. Okay, I think we may be good here. That's my thought. I'm hopeful. Let's lean towards saber rattling. I would say oil, in my opinion, seems to be leaning towards saber rattling. There you go. Mario said a bunch were also duds. Probably, yeah. So I mean, they're all like yeah. Like when I take my dog for a walk, right? He's enormous, and dogs will bark, rah, 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 and they'll come running around the corner, and they'll run up, and they'll get about 20 feet away, and they'll sort of stop and bark a couple more times, and then they'll turn around and just go back. And he just kind of sits there looking like, huh? And my thought when they're done, that last bark, they're saying, I consider this matter concluded. Like, and they walk away like, oh, okay, it is concluded. A lot of saber rattling. There you go. Okay. Here we go. Yeah, actually, I feel okay about what I'm seeing here. I was real like, okay, if we caught this and turned, that is the escalation of war right there for me. The fact that we came down more, I'm like, okay, here we go. Let's see. Let's take a peek at the dollar while we're looking around at things that we think might help us some pressure. Carmen, I'm so sorry to hear that. My condolences. So here, I want you to look back where we are, right? We're right in this area here. This is when it first escalated. And from here, it kept on going, right? So let's mark a couple of things here. The dollar in this area and in this area is the first time they start showing a little bit more strength. And now at this point, right, we're a little concerned, but is there more to go? And now let's put the S&P on here. And you can see the first time it started to show weakness was here, and then by the time that this next mark showed up, it was already like, you see the correlation that we see here? So this is that first dip right here, and here we have the first dip right here. Now we're saying, are we going to get one of these where it comes up and just doesn't get very far, followed by what? Bam, another dip. And this one actually got 3 dips. So there was 2 bearish windows in here that could have been traded. And that is what ultimately gave us from here to here. That was 10%. So if you see it, you got 1, maybe 2 windows. Okay, that's what I'm getting ready for over here. 1, maybe 2 windows. I'm absolutely getting ready for it. But at the same time, I'm not bearish. So that's not all I'm thinking about. I'm thinking, well, do I have some opportunity for a trade in here? And if you look back in this area, if I had put a trade on it, it did go up and then it kind of went sideways. So that was a bullish trade that didn't work. So if I have, that's the question. What's the trade? What are the conditions we're in? Well, I want you to look down. We can't move away from this chart yet. What do we notice has happened? We've escalated. Just like back here where it escalated. Is there more to go? Now, this one fooled us a little bit, and then it, bam, really popped. It could either do the same. I've been bullish. Why have I been bullish? Because look what the market's done. It's been super bullish. It's been pretty good money trading bullishly. But now it's time to recognize that conditions have significantly shifted. They turned sideways, and now they've turned more into selling. And now we're thinking, wait a second. Are we turning into this over here? And this is just a correction. If, for whatever reason, things continue to get worse, then we expect my posture to be negative for the duration of that. Like it was back in 2022 when we had a bear market. VIX opened almost at 22, right? I mean, that VIX, and it's coming back down, but it's been just like slowly just kind of pushing higher, pushing higher. This is one of those markets where all of a sudden people are like, wait, what's going on? Because they're just not looking around frequently enough and often enough and comprehensively enough to glean that the conditions have shifted. They're the frog in the pot of water. And then they're like, oh shit, it's hot in here. You're like, yeah, it's been getting that way for a while. Let's just see it. So let's I'm done playing drawing. It was a fun drawing day today. Let's take a look at Stella. Stella says what? Dropping. Before we get that second shoe dropping, that's my thought. Weigh in. Tell me if you think I'm right or wrong. I'm just saying that when you go back and you look at corrections, there's a pattern there. It's not like every correction is a snowflake. They're all different, right? No, they have the same pattern. We see the same constructs with how volatility kicks up. You know, they're not completely identical, but there's enough there to study for us to be like, yeah, okay. There's a there. Okay, let's go. I keep saying that today. Oh, I don't know why I like using the word there 3 times in a sentence. That's just wrong. IWM. Down. All of them. But again, now it's like, okay, but let's not overreact, right? I don't want to put bearish trades on right as this thing stabilizes. It bounces up. We don't want to get caught reacting and chasing. We got to figure out how to get in front of this thing. Cyclical is broke, so I'm not looking at it as much now. Once it's broke, it's broke. Right? You can kind of see we were thinking this, we were thinking zig, and it's zagging. Okay, adapt. Adapt. Be water, my friends. Comprehensive look at everything. Oh, Apple, such a disappointment. I was ready in this period through here. You can see we broke down. We're now at new lows, unfortunately. AIGs under the 50. It's trying. Ooh, I tell you what, if this thing can't get too high up, there's one of those dips. Now here's the deal, right? Let's make sure we always take one more step back, and then we have a look at the longer term. When we look at the longer term, yeah, it was running hot. You can see that it actually accelerated. This would have been a strong trend. I'm not going to do this on everyone, but I just wanted to show you why this is a valuable analysis. This was the trend. That was pretty strong. Pull back and then pull back a little more. And where is it? Right back at the bottom line of this. So that's why we can't only look at the short term and not recognize what kind of a long term are we now shifting into in order to make sure we catch the next wave. Make sense? I hope so. I feel like it's been a productive discussion today. Netflix broke trend on earnings. Yeah, we'll see that here in just a sec. AMD, I mean, I've just been kind of holding off, kicking it off the list because I like it, but certainly it's down. Amazon looks actually fine to me. What would I think about? And here's the trades that I'm starting to think about. Butterflies and broken wing butterflies. right? Broke butterflies and broken wing butterflies. Bearishly, you got to be careful buying puts right now. I'd say bear puts, bear calls. You could even break a wing to the downside theoretically on butterflies. So yeah, you can play with that. So this is Amazon. I think Amazon still looks bullish, but it does have earnings. So AXP still looks bullish. Is it bullish because of earnings? Yes. They did well. They're bouncing. That looks pretty good. Boeing doesn't look good at all. About to report earnings. Bank of America trying. So there's a few financials that are trying to kind of see like, okay, let's see what they can do now. But it looks different. That was a bigger pullback, more of a sell-off. Caterpillar looks fine. But the problem is I'm now way over earnings, so that's tough. Chipotle, Capital One, bouncing. Also capitalizing on that news from AXP. Okay, so oil. Yeah, I mean, it's kind of hard, right? Like, I feel like, oil's bullish and you kind of have to put it. Are you not? What are you doing with the oil right now? You got to be, right? If oil makes that run to 100, be careful. Cash secured put. Ooh, yeah, that's a great question. I would probably, most conservatively, I would say I'd say probably 175, right? Because it's this, you're a little underneath where this is here. It gives you this like real nice little support area right through here, right? Right in that area, 175. The vol looks great for that, Chuck, right? I mean, it looks great. That's a chunky premium. Yeah. Why be careful if oil goes to 100? Did I say be careful? I mean, be careful because that's going to put pressure on the market, but I would want to trade oil, right? Be careful not to miss it. Puts this at a higher high. Victor says he wants to see a little more out of the Middle East. Yeah, I mean, I agree. If I get the signal, I'm going to put the trade on and then make the adjustment if I need to. The 170, Fred, I agree. I mean, it's a little bit more conservative, meaning you'll get a little less premium, but you're a little farther away. I think either one of those look pretty good, right? 170, 175, something like that. Costco, flat. CrowdStrike continues to now meander below its 50. So we're seeing a lot of the tech just kind of easing out. Delta staying okay. The Dow, but it's not defensive, right? It's not like we're like, you're not seeing like a shift into the Dow or into utilities or into staples. Bitcoin failed to break its high, failed to complete this ascending triangle, and in fact broke its low, which would complete a triple top. It did have volume here, but not on the break. If it fails to get back up to this level, I would definitely be looking at shorting. There's a nice shark frenzy back down. Look at this shark frenzy up 33 to 65. So it basically doubled in this month. And now I think, yeah, we've got some downside. We'll see. GE looks strong, getting ready for earnings. Gold looks like it's topping out, but it does still look bullish, right? Google looks bullish still. Communication services look pretty good. Earnings coming up. There's that small cap. It broke it, and it can't find. It held all this. It's like, get it? Now we're like, we're not getting it. Boom, and falls. Same kind of a thing. If you pull back, that's what keeps happening to small caps. They ran a little hot here too. You can see this pullback. We've already got this one. So now the question is it even more discouraging news and we drop even a little? Meta still looks good. I like communication services. Google Meta looks fine. Microsoft has broken the 50. Not good. Not good for us. Micron, I mean, it's above the 50, but that looks more like a sell-off than a pullback, but we'll see what happens. It's hard to want to move into tech. There's Netflix, revenue, bad subscribers. Nvidia, holding, but barely. Picard, the industrials are starting to show some weakness as well. But remember, it's not like, oh, it's weakness and now we're turning into bears. No. No, that's a 50-day. I have a 50-day exponential moving average on my price chart. 20 days for and simple for volume, so I can see when we have volume spikes. You can, no problem. Kevin, good to see you. I didn't know if you were here earlier. I called out that I was going to have to eat my words regarding interest rate cuts in 2024. Oh, Bitcoin is the last day and it's having, yeah, the halving definitely has an influence. I really don't track it. I try not to follow the news. It's funny because there's an old trader who one time said, show me the chart and I'll tell you the news, right? Like, but it doesn't really matter. Like the chart tells us if there's anything worthy. What it is doesn't really matter. Doesn't matter to us? I don't know. So I try to not read the news too much. Volatile security despite. But yeah, definitely. I knew there was a halving close. Right? And yes, Mario, the news tends to get priced in. Once the news is known, unless it's new news. New news will then get priced in pretty quickly. Okay, PLTR still down. QQQ. Yeah, look, we can feel it. We can see it. We've already been easing up, right? Even when my posture actually stayed positive for 2 weeks, I'm like, there's a sideways look that's causing me to dial back trading, right? I would imagine that most of you have already been for 2 weeks dialing back your trading. I know you've hedged because we've talked about the hedges. And I would hope that you kind of are in a place right now where you're like, yeah, I mean, I don't love these conditions, but I'm fine. No big deal. Let's see what comes next. TSM. Yeah, they're just kind of breaking down. And yeah. Oh, there you go. Right. That's what someone called that out earlier. Someone said that? Fred? Someone talked about that. Opened up and now it's dialing back. But even as it dials back, if we get a market pop for the next 3 or 4 days, then we would expect this to continue. But if it's only 3 or 4 days and it doesn't go very far, and we get here and start to turn, what's our thought? This is expanding a 10% correction, right? Okay. Waste management looks good. Unfortunately, I just don't like enough right now. I mean, that's a maybe. Hey, Robert, I see your comment. Unfortunately, I have to head right out after this. I won't be able to. Walmart. If it doesn't break the 50, I'm still a maybe because it could get defensive. Materials have pulled back. That's good. I love to see that pull back so that the inflationary pressures ease. Communication services are still holding up. Energy, Unfortunately, energy just looks bullish here. I think that there's enough selling pressure in this to think that maybe we find something like that. That would be fantastic if it did. I'd love to be wrong on a trade like this, to be fair, because of the implications it has for the broader market. But I do see this as a bullish signal still. That is a higher high. That is a higher low. We are above the 50. Our stochastics is in a good place. So yeah, you can see where, if anywhere, I'm likely to be putting new bullish trades on. Yeah. Financials. Yeah. It's going to suffocate under that 50 if it can't get above it soon. Industrials sitting right on top of the 50. So you can see even our strong, steady leaders are all just sort of taking a little pause. Technology down. Staples, it's not defensive though. So whatever is going on, we don't see just like a defensive realignment. That's why I think correction, not defensive. Defensive means preparing for bearish. Corrective means everything pulls back, then everything starts moving again, right? So healthcare is down, consumers down. But be careful. Oil looks good. If you're looking for something to trade and you don't have oil, oil looks good. Overall, though, I'm looking for a continued decline in my market posture. I do think we may have second drop moving into corrective territory. That's my story, and I am sticking to it. Google, strike. That's a tough one, right? I mean, you've got such great earnings. With Google, I would probably want to give it a little bit more room. 150 at least, maybe even down around 145 so that I could like catch itself in here if it gets a little stumbly off of these earnings, if you're going to hold through earnings. That's the hard thing, right? You got this. If you wait for earnings, that ball drops. If you get before, you have to contend with it. That's what I would think. All right, I got to run. It's great to see everybody. It's so good. I hope you have a wonderful weekend. I won't see you till Wednesday, but I hope you feel like you have a better handle on the market and what's going on. Have a wonderful weekend, and as always, happy trading.